Okay, everyone, going to go through problem 7.3, internal service fund. We are starting out with a September 30th, 2010 balances for these various funds for the central duplicating fund of the town of Fredericksburg. This was their closing balance from the 2010, and so I've posted those here so that it would work with our trial balance that we have, and you'll see that in use in a moment. So let's start making our entries. Say during the fiscal year 9/30/11, following transactions summarized occurred. Employees were paid $290,000 in wages, and it should say net wages in cash. Additional wages of $43,500 were withheld for federal income taxes and Social Security taxes. The employer's share of Social Security taxes amounted to $23,375. And so what we have here is we have to kind of back into some numbers or add up some numbers to get there. So let's start with our debits. Wage expense. It is going to be the sum of two things: the amount of the cash paid to the employees, which is $290,000, plus the amount withheld from their paycheck, which is $43,500. Okay, that gives us that debit of $333,500. Our next amount is we're going to record our payroll tax expense for the employer's share of the Social Security and Medicare taxes. So $23,375, sorry. And now we'll do the amount that was paid. We'll start with our credits here. We paid $290 in cash net to the employees. And this last one is the amount of taxes that we have to remit to, let's see, is it called to federal government? Here we go. And that's going to be the sum of the amount of the employer taxes plus the amount of taxes withheld from the employee's paycheck. So that balances our entry. So we can move on to number 2. Number 2 says, the reason we're not making any entries to the government-wide journal, the Governmental Activities Journal, is because these two, this internal service fund, or internal service funds and enterprise funds are used the accrual basis of accounting, just like the government-wide Governmental Activities Journal. And so those can basically just be brought into the government-wide statements as they are. The governmental fund statements for the internal service funds and the enterprise funds can just be taken into the government-wide statements as they are. There's no adjustments needed or minimal adjustments needed. And so let's move on to number 2. Cash remitted to the federal government during the year for withholding Social Security taxes amounted to $65,500. We're going to reduce our due to federal government liability by $65,500, and because we paid, the amount is a paid amount. We are debiting cash for $65,500. All right, utility bills received from the town of Fredericksburg Utility Fund amounted to $23,500. So, first of all, let me point out that you're going to notice on a lot of these, you're like, wait a minute, this is governmental accounting. This stuff seems kind of easy. And the reason it might seem easy to you is because a lot of the entries look just like they would for a for-profit business, because we're on the accrual basis of accounting. So although the names might look different on some of these accounts, the overall structure of the entries should look familiar to you. So this one is utility expense for $23,500 and accounts payable for $23,500, because it just says that we received the bills. It doesn't say we paid it. So let's go to our office expenses paid in cash during the year amounted to $10,500. So this one's cash. So we're going to still record the expense just like we did for utilities. And except we're actually paying these bills. So cash, 10,500. All right, service supplies purchased on account during the year totaled 157,500. This one should be easy. We are purchasing inventory here. So, we're purchasing inventory here, and we're purchasing on account. So the inventory account for this one is called service supplies inventory, and we'll do 157,500 is the amount we purchased. And because it says we purchased them on account and haven't paid the cash yet, paid the bills in cash, we're going to credit accounts payable for 157,500. All right, number 6, parts and supplies used during the year totaled 152,300 at cost. So this should trigger us to know that we're talking about kind of cost of goods sold here. So the account here that's going to be used is called cost of parts and supplies used. So we're gonna debit it. We're recording this expense of these items being used, and correspondingly, if you remember from your other accounting classes, we are reducing our inventory by the same amount. Okay. Scroll down a little bit here. Changes to departments during the fiscal year were as follows. Charges to departments. So we're charging these other funds. Okay. So we're charging these other funds for our services, and so we are collecting revenue here. And let me make sure I got okay. It's just called revenue on this. So revenue. We need to do our debits first. So let's do due from other funds. Okay. And our total there is 588,000. And we're going to credit revenue for 588,000. Oh. Okay. Now, let's see. Unpaid balances at year end were as follows. So we're kind of looking at revenue again and due from other funds again. And the problems, this is an accounting class, an accounting problem. So they have to figure out a way to make it difficult for you to test your knowledge. Unpaid balances at the year end were as follows. So it looks like we got 10,000 and 20,000, making a $30,000 ending balance for due from other funds is what it should be. Okay. So let's do this. Let's, instead of making a T account, we'll still do our work up here out to the side, but let's scroll back up here to our trial balance, and we'll see that due from other funds. Where is it? Due from other funds has a $608,200 balance, and it is saying that it needs to be a $30,000 balance. That's what the problem is telling us is the current balance in the account, and it wants us to basically what we're solving for here is the amount of receivable that we've received in cash this year. Okay. So let's do this. Let's take our current balance, or our balance on our GL, and subtract it from the balance we're trying to get to, which is 30,000, and it gives us a $578,200 credit to accounts receivable or due from other funds. Okay, 578,200. Let's take that down here. And it's going to be our credit to accounts receivable, so we'll put it on the second line of the entry. I always like to paste values just to make sure I'm all right. So we know our debit is also going to be 578,200, and it is cash that we received. And this is going to be our receivable account due from other funds for 578,200. All right. Number 9, payments to the utility fund totaled to 21,800. Okay, so this one should be easy too. We we had some bills earlier where we recorded our payable for the utility, so we're paying those bills off now. And actually, we didn't record it as a. Did we record accounts payable earlier instead of due to other funds? We did. Yes, we did, and we should have recorded due to other funds. Sorry, because we're paying another governmental another fund here. So due to other funds, the amount is $21,800. All right, that's our debit, and our credit that we're is of course the cash because we're paying off the bills, or at least most of them. All right, accounts payable at the end of the year amounted to $13,250. All right, so here again, just like we did with this problem, we need to get to that number. We need to get to $13,250. And it's wanting, so it's basically wanting us to back into the number of how much of accounts payable has been paid off over the year. Okay, so if we're trying to get to, if we're trying to get to $13,250, then we just go find our accounts payable balance here of $170,200. And let's go, yeah, we can add this time because I put it in the opposite sign. Let's see, that's not looking like the correct number, 13,250. And yep, it is right. It is right. So the change that we're going to need is a decrease in accounts payable by $156,950. Okay. So let's go to, we're going to debit accounts payable for $156,950, and it's saying which is what we're solving for here, is how much of that accounts payable did we pay off in cash. Okay, so it's $156,950. Basically, beginning balance. And let's show you here, other than the trial balance, this is kind of a shortcut to your T account kind of look, and we've got two credits, so we've got a balance of $170,200, and then we need to get it to $13,250, and that requires this entry of $156,950, and you can check your work up here with the trial balance and see that it is. Okay. Oh, let's see here. I want that, and I don't want this. Okay. Now let's go to number 11. Annual depreciation rate is 10%. So basically, all we're looking for here is we're going to find what our fixed assets, machinery, equipment, long-term assets, what that balance is, and it's $300,000. Okay, so 300,000 divided by 10 is 30,000. So 30,000 is going to be the amount that we're recording annually for depreciation. So let's go here, and we will debit, what do we call it? Depreciation up here. We just call it depreciation of machinery and equipment. So let's go here, 30,000, and allowance for depreciation is also 30,000, and that's that entry. Okay, number 12 says we are closing our revenue and expense accounts for the year. Okay, so let's go here and let's start closing our accounts. So first, our debit's going to be for revenue for $588,000. Okay, so that will close that one. But let's say yes right here. I think that's the closing account. Sorry, closing entry. Why is it not closing revenue? Oh, because I haven't titled the account. There we go. You can see on the post-closing trial balance, it closed it out. Now let's do a shortcut for these and take our the rest of our expenses Okay, I'm going to paste these values here. Good. And now take our pre-closing balance and credit those, closing out these expenses. Okay, and take this down here. So our entry closing amount, we are 14,825 too high, or we have a 14,825 debit balance for the entry, so we need a credit to net assets unrestricted. Okay, I'll type all that out. We'll just do this and this. And let's also call that a closing entry, so it will change the balance in the correct account. Yep, you can see it there, adjusted the balance. All right, so there's one more thing that you have to do in both the city project that you're working through for the semester as well as on this problem. And that is, you notice this account here for net assets invested in capital assets. It's kind of a set aside so that, you know, unrestricted net assets isn't kind of overstated, or it's not overstated of how much in true net assets or in kind of expendable net assets that a certain fund has, because a portion, as you can see here, 210,000 of this fund, if you're looking at the total's 280, and 210 of it is actually from basically machinery and equipment that hasn't been fully depreciated yet. Okay, so what you have to do at the end of each year, an internal service fund with where you are designating a certain amount as being invested in capital assets, is you have to update that capital assets number. Okay, and the way that you go about that is that you have to start with your beginning balance in the account, which is 210,000. And basically, then all you're doing is showing, is kind of reflecting any changes to capital asset related accounts. And so that's going to be new purchases, a new debt associated with capital assets, and then debt payments on less debt payments on capital assets, less depreciation, things like that. So you're just basically taking all fixed asset related, or capital, what do they call here? Capital asset related amounts, and you know, in recording those changes for the year. Okay. So in this case, we have depreciation is the only change, and additional depreciation that was taken for the year, and that is going to be negative 30,000. New purchases are going to be a positive. New debt associated with buying or acquiring new capital assets going to be a negative. Debt payments, where you're reducing your debt, going to be positives. Positive investments, but in this case, we only have the depreciation. Okay, so what we're coming up with here is we are going to have a balance of 180,000 is what it needs to be. Okay, for this net investment in capital assets. So all we're doing here is we are going to debit this one. I'm sorry, I like to paste values because I've got conditional formatting and all that kind of stuff. So we're debiting investing in capital assets, net assets, and we are crediting net assets that are unrestricted, which should give us our invested in capital assets a final balance of 180,000. Okay, and I usually like to include this as part of the closing entry so that it kind of differentiates the activity pre-closing and post-closing for this account. Okay, that's it for this problem. Hope it was useful to you.